welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from Consensus by CoinDesk in Austin, Texas. And joining me for this segment, we have William Quigley. He's the co-founder of Tether and Wax, and we're going to discuss how blockchain technologies are really taking over modern businesses, and they will be deploying this type of technology in the future. William, it's great to have you with us. Welcome to TradeTalks.
Okay.
Let's talk about some of those companies that are starting a new path to cryptocurrency and blockchain programs.
Okay, so you mean any company in America today that's not in the sector, that's thinking of getting in?
They need to get in.
Right, they do, and really you've got two angles. You've got the sort of a replacement for the inefficient financial services industry, and there are literally several $1 trillion worth of opportunity for anybody in the traditional financial services industry or people using financial services. Think of Apple, right? So Apple now has decided it's going to go full force into offering really a financial services platform to its users. So those people should not be using a 50, 60-year-old antiquated system. They should be doing a lot more on blockchain. And I think eventually they'll figure that out. Obviously, there has to be some regulatory clarity for them to do that. But the other side of it is all the consumer companies that are looking at things like NFTs and saying, wow, as the world shifts more and more to the non-physical, to the digital, NFTs look pretty compelling. And it's, of course, high margin revenue and a very robust group of people globally, demand-wise, that want to buy it. So I think from those two angles, you're going to see a lot of traditional companies getting more into blockchain and crypto.
It's interesting, a big theme that we've been covering on the show over the past 2 days is NFTs in the commerce space. Not only just from getting exclusive rights on NFTs and getting the merchandise in store, but the social community that comes along with it as well. I mean, think about it, NFTs are another distribution channel, another engagement channel for these companies as well, and to your point, a relatively low fixed cost to execute on that versus the physical brick and mortar traditional types of engagement and advertising.
Yes.
It really is incredible how commerce is catching on to this.
Yeah, and you know, the video gaming industry has always been very big and robust, and yet it was isolated. Venture capitalists redlined it. When I was a VC, there were virtually no VCs in America who would invest in video gaming. Well, NFTs and blockchain-based video gaming are hand in glove. So if you're going to have a blockchain-based video game, you're going to need NFTs. And what we're starting to see is those old traditional video game companies saying, how can we play in this? And you're seeing traditional companies that just want to get into NFTs. And I think the real stumbling block, especially for traditional video gaming, is going to be the way it affects their business model. Because these companies have been used to controlling everything that they do. And I've never found a capitalist who wouldn't become a monopolist if he could. In the video game industry, they're all monopolists. They control all the digital real estate. Whereas with NFTs, the consumer can take his virtual items from that game and go do something else with them. They can trade them. And that profit stream doesn't necessarily go back to the video game company that helped birth it. And so this is a tension, which if the traditional companies wait too long, you will have native, brand new startup companies that start to just dominate in the blockchain-based video gaming world. So they've got a few years and then it's going to be too late.
Speaking of traditional, I want to talk about our traditional legacy financial assets, to your point before. We tend to think a little bit US-centric here. And there are billions of people around the world who have already adopted this technology, the underbanked and the unbanked, and this is the way that they transact their payments. This is their source of revenue. And we're falling behind if we're not innovating along with the rest of the world. What do you think the future of stablecoins and DeFi is within the US and around the world?
Yeah, so first I'll say, stablecoins, I even think a lot of people at this conference don't fully appreciate. Stablecoins are the circulatory system of crypto. Without stablecoins, crypto as we know it does not exist. Consider this, Tether trades about $30 trillion annually. Tether settles against almost 60% of all crypto trading pairs. Anybody who's doing arbitrage trading on crypto has to have one side of that trading pair be stable. You can't arbitrage if both sides are moving because you can't calculate your profit. So without stable coins, crypto really doesn't exist the way it exists today. Now, the big question is, would central banks looking at this and saying maybe we should tokenize our fiat and create stable coins, what's going to happen? We won't know, but there's different avenues that it can go. In a few years, we'll see it. I believe by 2030, most of the world's major global economies will have tokenized their fiat, or they'll be on the path to tokenize. And what will happen when those big central bank digital currencies are running up against privately issued stablecoins? I don't know. Because this is a global thing, one country could ban a stablecoin, but crypto exists everywhere, right? So maybe they would say to their citizens, you can't use private stablecoins, you can only use our stablecoins. And I think that would be a tragedy, mainly because any central bank that issues something is going to think a long time about doing it, publish it, release it, and not do much else after. There is massive innovation with stablecoins on the private sector. And if you cut that out, then you really start to atrophy all the innovative things you could do with stablecoins. That I think what should happen is central banks should look at what these private stablecoin companies are doing and take pieces that they think are useful for them and incorporate them in their currencies. There's not a lot of innovation that goes on in government-run programs. So that's the biggest negative if they try to stamp out the private ones. I hope they don't, because they're truly an important area for us in the crypto world.
Isn't that the challenge, though, when you think of these newer technologies and coming up with global standardization when it comes to regulation? We look at data very differently. We look at media and technology very differently. Of course, free speech in our First Amendment is one of the big reasons with that. We have very fundamental differences when it comes to that. And of course, the argument around social platforms, what's happening in Meta, what's happening with all these data-driven newer technologies, I feel like that's one of the roadblocks.
Yeah, though I would say the huge difference between what I call the dark overlords of the internet, right? All of those giant companies and from Web 1.0 and 2.0 that now dominate everything. The big difference between the way those companies' technology base is set up and the way crypto is set up is they are closed, black systems. You cannot see what they're doing. You can't inspect their source code. You can't tell if it's a friendly piece of software, if it's malware, if it's spyware. They won't tell you. Well, with blockchain, all the source code is exposed. So you can see what that thing does. In fact, in the early days of smart contracts, the people who would build them would say to people asking about them, we don't do an FAQ or an explanatory list of what the smart contract does, because you should just look at the code and it'll tell you. And while not everybody wants to look at the code, the fact that you can always look at this and say, are you snooping on me and you're not supposed to? Because it's transparent, it gives you a lot more confidence that nothing negative is going on. I think there's a lot of interest in systems that are transparent and where you can opt in or out based on what those systems do. A lot of us got hooked on the Web 1.0 and 2.0 properties, and now we're surprised when we have a private conversation about some topic, taking a vacation, and then 2 seconds later, we're getting, right? It's creepy. And so that doesn't exist in the crypto world. And another reason why I think as we get more people exposed to it, there'll be a strong interest in using blockchain-based technologies. And the only real stumbling block is how consumer unfriendly it is. I came from the Walt Disney Company, where we always said consumers pray to the god of convenience. They want it convenient, and convenient means easy. You don't have to spend 2 hours to figure it out. Crypto is still early, blockchain is still early, and it's intimidating because it's not so easy to use. Once we crack that, I can see a lot of people wanting the system around the ethos of blockchain versus closed systems that are taking your data, privatizing it, doing who knows what with it, and you never know.
Right, and then to your point also, once we see blockchain technology applied to more familiar industries, if you will, then we'll start to understand it. And I asked a guest the other day, if blockchain wasn't associated with cryptocurrency off the bat, perhaps it was associated with title transferring, or with healthcare, or with insurance, which is starting to go into those industries. It's not as sexy as making money like it is with digital currencies, but those kind of verticals that are familiar to people, I think that will help to evangelize the story a little bit more and help them understand.
I think that's a really good point. If Bitcoin had first been started as a way to secure title and worked with a bunch of registrars around the world to ensure that property transfer was done correctly, people's view of it would be, wow, that's a really great thing. The fact that it started as an alternative to fiat currencies right after the financial crisis, I think made a lot of governments say, wait, is this opposed to what we're doing? And so there was a lot of FUD in the early days of crypto and blockchain. Whenever you saw a headline, if it mentioned Bitcoin, it also mentioned money laundering, financing terrorism, and tax evasion. And it was like those things were glued to that brand. And we've started to be able to get beyond that by people seeing what happens in DeFi and video gaming and NFTs and seeing, oh, blockchain has more uses than just as a substitute for traditional fiat. But it's a repositioning in the minds of lots of people what it can do.
Thank you so much for joining us, William, and thanks for joining me on Trade Talks. I'm Jill Malandrino, Global Market Reporter.